Hello, everyone, and welcome to today's segment where we unpack the latest developments from a major player in the tech world. We're going to be talking about Adobe, a company that recently announced its financial results for the second quarter of fiscal year 2025, which concluded on May 30th, 2025. Now, you might expect that when a company delivers strong numbers and raises its full year outlook, the market would react with unbridled enthusiasm. However, Adobe stock saw a rather mixed reception, with shares even dropping shortly after the news broke. So, what exactly is going on? Let's break it down. Adobe officially reported record revenue in its second quarter, hitting an impressive $5.87 billion. This marks an 11% year-over-year growth, both as reported and in constant currency, demonstrating consistent expansion for the software giant. When we look at the profitability, the diluted earnings per share came in at $3.94 on a GAAP basis and a healthier $5.06 on a non-GAAP basis. This beat Wall Street's expectations, as analysts had been modeling for earnings around $5.97 on sales of $5.8 billion. Delving deeper into their financials, Adobe's GAAP operating income for the second quarter stood at $2.11 billion, while non-GAAP operating income reached $2.67 billion. The GAAP net income was reported at $1.69 billion, with non-GAAP net income climbing to $2.17 billion. Furthermore, the company generated strong cash flows from operations, totaling $2.19 billion. Exiting the quarter, Adobe's remaining performance obligations, or RPO, were substantial at $19.69 billion, with current remaining performance obligations, or CRPO, making up 67% of that figure. It's also worth noting that Adobe was active in the market, repurchasing approximately 8.6 million shares during the quarter. Breaking down the revenue by business segment, the digital media segment was a significant contributor, generating $4.35 billion in revenue. This represents an 11% year-over-year growth, or 12% when accounting for constant currency. The annualized recurring revenue, or ARR, for digital media exiting the quarter was $18.09 billion, showing a solid 12.1% year-over-year growth. Meanwhile, the digital experience segment reported revenue of $1.46 billion, marking a 10% year-over-year growth, both as reported and in constant currency. Within this segment, digital experience subscription revenue specifically was $1.33 billion, growing by 11% year-over-year. From a customer group perspective, Adobe's strategy is clearly defined, focusing on two main areas: business professionals and consumers, and creative and marketing professionals. The business professionals and consumers group saw subscription revenue reach $1.60 billion, achieving a robust 15% year-over-year growth. The creative and marketing professionals group, on the other hand, generated $4.02 billion in subscription revenue, reflecting a 10% year-over-year growth, or 11% in constant currency. This growth across customer groups is central to Adobe's strategy of delivering groundbreaking innovation. Following these strong results, Adobe's leadership felt confident enough to raise their financial targets for the full fiscal year 2025. The company now anticipates total revenue to be in the range of $23.50 billion to $23.60 billion, an increase from their previous projection of $23.3 billion to $23.55 billion. For non-GAAP earnings per share, the updated target is between $20.50 and $20.70, up from the earlier estimate of $20.20 to $20.50. Looking specifically at the third quarter of fiscal year 2025, Adobe expects total revenue between $5.875 billion and $5.925 billion, with non-GAAP earnings per share targeted at $5.15 and $5.20. These targets assume current macroeconomic conditions and a non-GAAP operating margin of approximately 45.5% for Q3 and 46% for the full year. A significant part of Adobe's current narrative and future growth hinges on its advancements in artificial intelligence.
intelligence. CEO Shantanu Narayan emphasized that Adobe's AI innovation is transforming industries, enabling individuals and enterprises to achieve unprecedented levels of creativity. CFO Dan Dern added that the company is investing in AI innovation across all customer groups to enhance value realization and expand their customer base. He highlighted that Adobe is leading the creative AI revolution with innovations like Firefly, Acrobat AI Assistant, and GenStudio, which are amplifying creativity and productivity. Firefly, in particular, is an innovative AI tool that empowers users to generate, modify, and improve images and videos using simple text commands, broadening Adobe's suite of AI-driven creative tools designed to speed up ideation and content creation processes. Adobe has even announced plans to integrate image generation AI models from OpenAI and Google directly into the Firefly application, further enhancing its capabilities. This commitment to AI is reflected in strong progress with AI generations up 20% quarter over quarter and AI annualized recurring revenue on pace to exceed the $250 million target. They've also partnered with Newell Brands, leveraging Firefly and Adobe Express to streamline content creation and improve efficiency in areas like packaging design and social content production. Despite these solid results and the promising outlook, Adobe stock saw a decline on Friday morning as the market reacted with mixed sentiments. Shares slumped nearly 6% in recent trading, bringing them down about 12% for 2025 so far. Analyst reactions highlight a common theme. While the results were strong, investors are waiting for more tangible signs of AI significantly moving the needle for the company's overall financial performance. For instance, Evercore maintained its outperform rating, acknowledging the solid results and raised guidance. But analysts noted that Adobe needs to do more to reshape its investment story and attract buyers, especially as digital media ARR growth of about 11% hinted at a potential slowdown ahead. Morgan Stanley, while keeping an overweight rating, observed that despite improving AI adoption with Firefly and Acrobat AI subscriptions on the rise, these gains haven't yet meaningfully boosted overall financial results. They emphasize that investors are still waiting to see if AI innovation will significantly impact the company's growth. Jefferies maintained a buy rating, calling the quarter solid with a 1% revenue beat and 2% EPS beat, along with strong AI progress. However, their analysts also pointed out that the AI contributions might not be enough to appease bears, despite management's confidence in achieving double-digit growth. On the other hand, some analysts, like Angelo Zeno from CFRA Research, reiterated a buy rating but cut their price target, citing concerns about increasing competitive pressures and a longer time horizon for notable AI monetization. Adobe does face heightened competition in creative software from players like Canva and various generative AI startups. Some firms like Deutsche Bank have affirmed a hold rating, expecting the stock to remain range-bound until the company demonstrates more tangible success from AI. This sentiment underscores the market's current focus on seeing concrete financial acceleration driven by Adobe's AI initiatives rather than just adoption metrics. Yet others, like Mizuho Securities, acknowledge that despite negative investor sentiment leading into the report, Adobe is beginning to meaningfully monetize its generative AI innovations, and an upcoming price increase should also be beneficial. Looking at the broader stock performance, ADBE stock is down 6% this year, underperforming the S&P 500 index, which is up 3%. The stock has shown considerable volatility compared to the S&P 500 in recent years, underperforming in 2021, 2022, and 2024. Historically, Adobe shares have also dropped after 6 of the last 7 quarterly reports, often due to conservative forward-looking guidance, as was seen in March and December, with double-digit percentage drops. Despite the market's immediate reaction, analysts largely hold a moderate buy consensus rating on ADBE stock, with an average price target that implies over 34% upside potential. According to one valuation estimate, the stock seems undervalued at its current levels, trading at 20 times its expected adjusted earnings compared to its average PE ratio of 25 times over the last 3 years. This suggests a potential for significant upside, estimated at over 30% from current levels. However, it's crucial for investors to consider the potential risks, such as a slower than anticipated acceleration in AI
AI-driven growth and the stock's historical underperformance during market downturns. In essence, Adobe delivered a strong financial quarter, marked by record revenue and raised full-year targets, underscored by significant strides in AI development and adoption. The company is actively integrating AI into its core products and expanding its enterprise solutions, yet the market remains cautious, signaling a clear demand for more definitive evidence that these AI innovations will translate into substantial, accelerated growth that truly moves the company's financial needle. The path forward for Adobe, while promising, will likely require patience from investors as the company continues to execute on its long-term AI strategy. Thank you for tuning in. We hope this comprehensive overview helps you understand the complex dynamics at play with Adobe's recent performance and market outlook.